All right, without any further ado, hi everybody, my name is John Boyd, and thanks so much for joining this special webinar that addresses the question that every transportation company really wants to know right now, which is how do I get a federal emergency loan or grant for my business? So as I mentioned, I'm the Executive Vice President for the Transportation Alliance. This webinar is being run live for Transportation Alliance members who have leadership or comprehensive levels of membership in our association. But we are also recording this so that it will be posted online on our website and available to all members later on, very, very soon, in fact. One thing that before we get started that I want to mention is that at the Transportation Alliance, one thing that we've found that is very effective these days is the Workplace app, which is an app created by Facebook. And it's been really invaluable to our members and to the association. This is an app where we have an account dedicated only to our operator members of TTA. And you can connect with all of the top people in the business on this app. You can ask questions and you can get great advice. So if you're not yet using this every day, I really urge you to do so. And if you need to get access to it, just send an email to TTA, to the Transportation Alliance, at info@thetransportationalliance.org, and we'll get you set up today. All right, now let's turn to the webinar topic at hand. Just so everyone knows, our audience is going to be muted during this call so that we're only hearing the speakers and there's no distracting background noise. But don't worry, if you have questions, simply hover over hover your mouse over the screen and you will see a small little chat icon. From that icon, you can click on that, you can type any question, and then we will read that for our presenters. And we're going to try to get to them all, but I know that everybody has a lot of questions. Our speaker today is Matt Doss, who almost needs no introduction as he is well known to our industry. Matt is the former head of the New York City Taxi and Limousine Commission, and he's now chairman of the Windell's Marks Transportation Practice Group. And he is also the president of the International Association of Transportation Regulators. His discussion today is going to focus primarily on the Economic Injury Disaster Loans, the EIDL, and the Paycheck Protection Program, the PPP, for transportation companies. But before we get to Matt, I want to turn it over to the president of the Transportation Alliance, Tom Arrighi, who wants to say a few words. Tom.
John, thank you very much, and good afternoon, everyone, and thank you for joining us today, a very important time during this coronavirus crisis. I want to thank John Boyd very much for helping putting it together with Al Lagassiere, Nick Cambus, and Matt Doss, who's been is going to be our feature speaker here. Also, Kim and Rachel from the office has helped greatly also. Once again, thank you so much. We look forward to learning much more. There's so much information out there, and hopefully this will help decipher some of the different relief for everyone. Thank you, Matt, and I look forward to hearing.
Great. All right, and now let's turn it over to Matt Doss, and he's going to give an overview of the PPP and the EIDL assistance packages for about probably 20 minutes or so, and then we'll move into questions. So with that, I'll turn off my screen, and Matt, it's over to you.
Okay, thank you, John, Tom, Al, everybody. Good afternoon to all of my TTA friends. Unfortunately, we've been down similar roads before with 9/11 when I was recently appointed commissioner, like 2 weeks before it happened, and then Sandy and frankly the TNC battle. So TTA is crisis tested. But first of all, I want to just have a quick moment of silence, if we could, just to give our thoughts and prayers to the members, the people who are suffering right now. The death toll has just surpassed 9/11, and there's more to come, and this is really horrible. I know we have economic concerns, but let's just take a moment to pray and to think of and have a moment of silence for those people who are suffering, and let's hope that they make it. Thank you. The economic devastation, as you know, is widespread. There's very little going on in most of these industries. And in particular, as you know, the taxi industry, there's a little NEMT work going on. There's some cities that are deploying vehicles to transport workers. We don't have much time to go into all of the nuances, but we're going to cover quickly some of the federal actions, make reference to some state and local programs that you should check out, and focus most of our time on the issue at hand, which is the payroll protection program from the CARES Act. So let me just see why this is not moving. Okay, here we go. Okay, so you all know who I am. We do have, by the way, a COVID transportation law hotline for TTA members. Any member of TTA can call us for help and free legal advice at any time. We get back to people immediately on the phone or an email with further questions, because this has really been quite a moving target. As you know, things have been changing in general by the minute. We've started daily blasts on news and highlights, just like the TTA has, servicing the members. We, even on this program, as late as last night, changes were made following a press conference with the president and Secretary Mnuchin. So please send any emails to myself if you need any materials. We'll get into what that is, but the hotline is 212-237-1106. Since we're working remotely, we don't have the ability to pick it up live, but if you call us and leave us a message, we will immediately retrieve that and get back to you right away. And we've already had some TTA members calling us, and we're happy to assist the industry at its time of need. The Windels group includes 150 lawyers, 30 of which are solely dedicated to transportation-related issues. We have experience in labor, corporate, tax, which are all involved with some of these issues. So we have a lot of former government servants, former judges, commissioners, and lawyers who are on our team. So public service is in our blood and it's in our hearts, and we're just happy to help all of you at your time of need, and as much as we can. There are basically 3 laws that I'm sure Paul Miller and Al and Tom and John have been sharing with you through the SNPs and through the board of directors for the TTA. There were 3 rounds. The first one was the EIDL, which we'll get into a little bit later, which provides for a loan program, which is designed initially to be in certain coverage areas where there was a disaster declared, which, unfortunately, for our purposes, that's going to end up being pretty much the whole country at some point, or most of it. And it's a $2 million loan that you can get. We'll get into that later. And then the second act that Congress passed was the Families First Act, which dealt with people who are ill and sick, extending the FMLA, Family Medical Leave Act benefits, and leave compensation. We'll get into that later. But the CARES Act is the one we're going to be focusing on most here today. And we're going to start with the payroll protection program. The law said one thing a few days ago. We've been fielding questions, and the yeses have turned to nos. Some maybes have turned to some yeses or nos, and also some question marks have led to bigger question marks. So it's a bit of a moving target. So we're going to do our best to try to answer them, your questions, as best we can. And if we can't answer them now, we will get back to you individually and collectively at the end of the webinar. So the guidance came out initially a day or 2 ago. And then after the press conference with the president yesterday, last night, they came out with interim final regulations that provide some guidance. In some instances, clarifying things. In some instances, it might appear that it even contradicts provisions of the actual statute itself. So I think usually lawyers rely on the statute when we're interpreting it. In this situation, it's so fluid and this happened so quickly that I would strongly urge you to follow the guidance and answer and get answers through your bankers as this proceeds. So what is the PPP? There's $349 billion in forgivable loans. Now, the way I like to refer to this as a grant masquerading as a loan, but you need to be careful because there's some nuance here, and if you don't do the calculations correctly, or if you don't cover all of your staff and take out and use too much of this money, there will be a loan that's not forgiven, or a portion of it. So you need to be careful on how you do that. The terms are the same for everyone. So you're not going to be able to call your bank, which is going to be running these programs, and negotiate the loan. It's a standardized form and an application that they put out. Every bank is going to be doing this for the most part, I believe, remotely. Certainly the big banks are. It's going to be automated to a certain extent. The secretary has said that I think over 700 people applied already, and that people have already received money. So I'm sure that'll be addressed at the press conference later today with the president. But he has also, under intense questioning, said that people will get the money, within 2 weeks of applying. That is going to happen quickly. If you play your cards right, you can, if you bring your employees back or keep them and pay them, actually get your loan forgiven. So we're going to get into that in a minute. You need to use the loan generally for payroll costs. You can use it for mortgage, interest, rent, and utility costs over the 8-week period after the loan is originated and made. Payroll costs are capped at $100,000 on an annualized basis for each employee, and up to 100% of the loan is forgivable if used for those purposes. Now, you may ask, well, why didn't SBA do this directly like they did with the EIDL? I think it could be a good thing in many ways. I think they did it. Number one, I don't think the government has the capital right now, so they're looking for the banks to float it. Number two, frankly, the banks are going to make some money on this, in terms of the servicing charges that they can charge the government. And possibly if you don't do things correctly, you may have to pay back the loan, and they'll collect your interest. So banks will make money on this, but also I think for an accountability standpoint, I don't think the government and the SBA was equipped to go down that road, and which is good because there's none of these additional regulatory requirements that SBA lenders and borrowers have to go through to be vetted, and a lot of the paperwork that goes with these grants for disaster relief has to be complied with. It's supposed to be a streamlined, easy process done through the banks. Don't be that concerned. I think we'll get through this in the next couple of days. I know there are some big banks that are saying we don't know anything about it. We had difficulty trying to get a lender to come on the webinar today because they didn't feel comfortable knowing enough about what was going on. And I think that's across the board. So you may get different opinions or different responses depending on the bank that you go to. I mean, the good news is that, most of these businesses will qualify. If you have 500 or fewer employees, or your other types of businesses like nonprofits and independent contractors that are part of your equation, then you will be eligible to apply for the PPP. So base owners can apply for car services and limousine companies, independent operators, operators of fleets and taxi businesses can apply. And also taxi drivers themselves can apply directly, though we believe that opportunity will be coming in a few days later on April 10th. The guidance came out, which says that the April 3rd deadline is for basically all of your companies, long story short. And on April 10th, it's for self-employed independent contractors and drivers. Small businesses and sole proprietors have a 1-week head advantage, which is potentially a good thing because who knows how long this program is going to last. So, what is a sole proprietor? It really comes down to corporate form. I think there's some overlap between these definitions. One thing that we're debating for hours is, well, what if, I am a taxi driver or a consultant and I don't have an LLC, and, do I apply now or later? So these are some of the nuances that are unclear. If you're self-employed and you're a consultant and you have 5 clients and you have income, I think the guidance shows that you should be applying on April 10th. Though if you read the statute, the way it reads, you are a sole proprietor. I think it's intended, if you look at the guidance, to be, if you have employees, okay, on your payroll, then you could apply now. Which lenders will handle it? Originally we thought it would be just SBA lenders. Now it's basically any federally insured depository institution, federally insured credit union, and farm credit system institutions. And if your bank, when you call them, is not falling into any of these categories, which I would find that would be a very small number, there is a process that they can apply to the SBA if they really want to do that for you. We do have a list of banks that are either well, first of all, the banks that we ordinarily deal with for medallion loans and for the transportation industry, some are not participating in the program at all. Some are participating with existing clients only to service them. And others are open, especially the smaller community banks and the credit unions are open to fielding these grants and these programs. So it really depends. So I would, my recommendation is that you reach out to your bank that you do your banking with, or that you've obtained loans from in the past. Ask them if they're handling it and ask them for help. And I'm sure they'll have something on their website shortly if they don't already. If you don't have anybody that you're comfortable with or you're not happy with your banker, feel free to call the TTA. I believe they have preferred bankers. We have people that we use in New York, and that some have national charters. So we're happy to make recommendations if you need that as well. So the SBA issued a sample loan application. As Tom was pointing out to me, there's still a lot of confusing stuff on this application. We can't figure out why the law says you need to get all of this done by June 30th, but the expiration date is in the corner for some reason, September 30th. Look, this was put together at 4 in the morning by SBA government officials. It's pretty basic and streamlined. It asks you to do the calculation up front. It basically asking you simple questions about whether you've been convicted of crimes, that you understand everything. It's really streamlined. They claim that this can be done in 8 minutes. I don't know if I agree with that, but that's what they claim. So some updates from last night. As I said, there's nothing that's changed on this. The loan payments will be deferred for 6 months. These are things that did not change in the regulations that were put out yesterday. Still, loan terms will be the same for everybody. No personal guarantee or collateral is required, and the loan payments will be deferred for 6 months, but interest will continue to accrue over that period. There's a copy of it in the PowerPoint if you haven't seen it already. The interest rate changed. Okay, it was originally in the statute up to 4%. The original guidance from SBA, there was an announcement the other day that it was 0.5%. And apparently a lot of the banks had a conference call with the SBA and the White House and complained that this would cause them to lose money. So they upped the interest rate to 1%, which is still not bad. But the loans will largely be forgiven if you maintain your payroll during the time period. So the loans can go up to 10 years under the statute, but the guidance and the regulations cut that term down to 2 years, with pre-penalty payments being waived as a matter of law. What can they be used for when you get these funds? They can be used for, like I said, payroll costs, anything relating to your employees' benefits for the most part, group health care benefits, the premiums, the paid sick, medical, or family leave. And it's only those insurance premiums. It doesn't include like workers' compensation and those other premiums. Mortgage interest payments, but not mortgage prepayments or principal, rent payments and utility payments, and interest payments on other debt obligations that were incurred before February 15th. So if you have a business loan that's out there, you could use this to pay the interest on that loan, but not the principal. Or you can use it for refinancing an EIDL loan if you've already received it, which is not many people have received it. In fact, I know operators that have applied for these loans and it was pending and they got notices the other day saying, apply for the CARES Act first. I think the government is pushing people to the payroll protection program first, and then if you need aid, which is what I recommend, you go for this other, the EIDL program, which is an actual loan. Go for things that can be forgiven first, see what you need after that, and then go for the other loan. You can apply for both simultaneously as well. I just don't think they're going to give you the funds or approve it until a few days or a week or so goes by and they see what's going on with the payment protection plan. So if you receive this loan for April 3rd to from January 31st to April 3rd, you can still apply. That was one of the questions that John had given me as well from the members. So how can the PPP loans be used? If it was not used for payroll costs, it does not affect your eligibility. But if your EIDL loan was used to pay for your payroll costs during that period, you must refinance your EIDL loan. So just a red flag. You don't have to worry about this if you don't have it. But if you do have it, you need to just look at the numbers, because I think the government doesn't want double dipping going on. Proceeds from any advance up to $10,000 on the loan will be deducted from the loan forgiveness. So if you did get that $10,000 advance, it's going to just come off the top. And also 75% of the PPP loan proceeds, including EIDL, shall be used for payroll costs. That's a change that was made the other day. So payroll costs include compensation to employees and independent contractors when you're doing the calculation. The guidance that Al and I were just discussing, we believe that despite a lot of the confusion that existed based on the original set of guidance and the statute itself, that, if you have independent contractor drivers, while the law still says you can use them in terms of their commissions on the payroll for you to determine what your payroll costs are to get the amount of the loan calculation, that drivers should be encouraged to apply in about 7 days on their own, because they are eligible to do it that way. The size of the loan, it could be up to 2.5 times your average monthly payroll cost from the last year. The cap is $10 million. If you're a seasonal or a new business, you use different applicable time periods for your calculation, and the payroll costs are capped at $100,000 annualized for each employee. So you can put in for a loan that maximizes and gives you much more money than what your payroll is. You could take that overage, that 1.5 of the 2.5, and that could be used for rent, utilities, and interest on other debts, etc. The payroll costs will be capped at $100,000 for your employees when you're using the payroll portion of that. So, for instance, if you have an office manager that's making $125,000 a year, including fringe and so forth, you can only use $100,000. I mean, you can take the extra $25,000 from any overage, or and ask for that, as I understand it. But they're not going to give that to you as part of the equation. Okay, but you're going to be responsible for repaying it. It will not be forgiven. They will only forgive $100,000 annualized costs for each employee, including all of the fringe. So a couple of sample calculations, which we can go through just to make this real to everybody. So if you have no employees making more than 100,000, let's say your annual payroll has 120,000, and actually, you know what? Is Pat Russo? Are you on the line, Pat?
I am.
Okay.
Hello.
So I have everybody. I haven't reviewed this because we just threw it in. We were making changes up until 2 minutes before because of the crazy stuff that we got from the government just a little while ago. So Pat Russo, some of you may know him. He's come to some conferences before. He's a former chief judge at the New York City TLC. He used to work with me there. He works with me now as my right hand at the transportation group, where he's a partner at Wendell's. So it's our 10-year anniversary at the firm. And I think, Pat, you've been with us for like 8 years, I think, right? Is it 8?
That's right.
7.58?
Yeah.
Okay. Okay, so you're at the top of our list for payroll protection, Pat. So Pat has been on the front lines with myself and some of the other members of our staff answering questions. So Pat, why don't we just run through some of these calculations to make this real for people, so that they understand, what they should be doing, because it is very confusing and there's very little guidance. Basically, they ask you to, to just put this at the top. There's no worksheets or schedules that we could see. So let's walk us through it, please.
Okay. So we've given 3 scenarios here, and this comes from guidance both from the Small Business Administration. Thank you, Matt, for that generous introduction. I appreciate that. I just thought that.
Don't worry, Mike, you're not going anywhere.
So,
you're with us for the long haul.
Thank you. So on example 1, in this case, let's say you're a business that has a payroll, again, no employee exceeding $100,000 annually from last year. So in your payroll in this case, let's say it's 2 employees at $60,000 with the fringe benefits thrown in that are qualified. Now you're averaging $10,000 a month. For the PPP program that is opening up today, that Matt just described, you just take that 2019 average monthly payroll, you multiply it by 2.5. Your maximum loan amount is $25,000, with the caveat that Matt brought up, which is that if you have a loan, you got into that first class from the loan program that was issued on March 6th, with that law, the first COVID-19 law. If you have a $50,000 loan, you lump it into this, and then the maximum loan amount will be increased. But this is, again, contemplating that scenario one. Just here you are. Scenario two is, well, you have some employees making more than $100,000 and some that are not. In this case, you have an annual payroll of $1,500,000. So you can't just divide that by 12. You take the excess salaries of above 100 and you remove it. That person, to be following up on Matt said, is not ineligible because he or she has compensation over 100,000. It's just a cutoff. So now we take that $1.5 million and we're dividing it, let's say, by the 1,200,000. We've gotten rid of that $300,000 in compensation and fringe in excess. You take that simple number, divide it by 12. Now you come down to $100,000. You multiply that by 2.5 for the $250,000. There's your maximum loan amount. And the last example that we've given, Matt, that you wanted to go through, because there was discussion about EIDL, that first loan package. Let's say you took that $10,000 grant, that advance that came out in the program, and you've been able to get that before today, before April 3rd. So between January 15th and April 3rd, you received $10,000 on COVID-1. Well, if your annual payroll is $120,000 and your average monthly payroll is $10,000, we've tweaked the first scenario here to say the $25,000 is your maximum loan amount, but we have a $10,000 grant. You now have to add that in. And in fact, if you use it for payroll costs, you must refinance it in. So in that case, in this third and final scenario, your maximum loan amount under PPP is $35,000. So we've given you three examples here, one with no compensation package in excess of $100,000, another one with some yes and some no over $100,000, and you have to cut that off at $100,000 for that specific employee. And the third example is we've got no one making more than $100,000, but you have an EIDL. So that's the scenario we have.
Okay, great. Thanks, Pat. I'm sure there'll be questions on that.
Sure.
So, there are going to be, and just stay on the line if you can, because we'll go.
I will.
I see that, Pat and Bree had needed to update this, but they didn't do that. We'll get a final PowerPoint together, that we can distribute with that little update. If you owe money when your loan is due and you use the loan amounts, anything other than the payroll costs, mortgage interest, rent, and utility payments over the 8 weeks after getting the loan. I think a lot of the questions that we're getting is the timing. I think this is the gotcha aspect of this. If you apply now and get it within 2 weeks and May is not here, and you are compensating people as of like April 20th, let's say, until June 20th, what happens for that last 10 days? And I think that's a big question. And bottom line is, I think you will get probably enough money to cover your employees, but it's only intended for 8 weeks. So you may be stuck with repaying that extra week or two as part of a loan. So that's one thing to look out for. The number of, there is actually some information, but not enough on the loan forgiveness. In fact, the SBA said they're going to be coming out with guidance on this point soon. So this is, I think, causing a lot of trepidation for people. If you don't know how the forgiveness process is going to work, they do tell you generally on the application, what type of documents they'll be asking for. But if you would reduce your headcount before June 30th, they'll reduce your loan forgiveness. And you're going to be on the hook. It'll be reduced if you decrease salaries and wages by more than 25% for any employee who made less than $100,000 annualized in 2019. And you have until June 30th to bring these people back on your payroll. Conceivably, you could wait like a few weeks to do this until you get some business for people to get involved. So independent contractors do not count for purposes of a borrower's PPP loan forgiveness. There's no reduction if you decrease their numbers on their compensation. So it really doesn't make sense in my view, even if you could interpret the law to allow your drivers to be paid by you and continue. I think that raises a whole host of other legal issues, but also you won't be forgiven, unlike full-time employees. And there will be more guidance on this, and I'm sure that we'll be sharing that with you when the time comes. The deadline to apply is June 30th. I obviously wouldn't wait that long. I would do it within the next couple of days or in the next week to get this all out of the way. Now, as a courtesy, we will be releasing before Monday frequently asked questions for transportation providers, and as well as a document checklist as we have conversations with some of the banks as to what additional information they may be asking for. We don't believe that it's going to be well beyond what they put on the application, but here we have a checklist of documents you should start getting together in order to do the calculations. And we're also going to update the FAQs after our presentation today and have all of the questions that came up for TTA added. So this way you have them and you can share them with your members who couldn't attend today. Now also, you know, I would check your region and your state and local governments, especially if you're in a hot spot like California or the state of Washington or DC or Louisiana, New Orleans. There's local and state legislators and governors and mayors are actually trying to lend a helping hand using tax levy and other funds for additional assistance. And, you know, just as a, you know, a quick, actually, before we go to that, let's stay on the federal stuff and we'll get to this in a minute. Pat, could you just quickly go over the key terms of the EIDL and also the Families First Act and what that means, and then we'll answer questions on that later.
Sure. I don't know if you could see me. I'm just going to try to get back on. That's sure. So for eligibility, we're still talking about businesses with 500 or fewer employees, keeping the same information from the first grouping. Independent contractors, sole proprietors can apply for that. What can you use for the loans? That's one of the biggest issues on the EIDL. You could use it to meet ordinary and necessary financial obligations like operating expenses, payroll, rent, fixed debts, higher interest rate debts that you would like to refinance and bring into that. So you just can't be, these are the costs that you can't meet because of the disaster. So the issue with the EIDL that's not as generous as the PPP is that you're going to be looked at for credit and tax history. You have to show the ability to repay, and over $200,000, or if an owner of a company has a 20% or greater share, you may be required then to put in a guarantee or collateral. The loan eligibility is going to be included in terms of the hardship you have and the normal loan process. The interest rate, if you're a small business, like the listeners today, the viewers today, is set at 3.75%. You apply, unlike the PPP, these loans and that application and information is done through the SBA. And the SBA puts it through one of their approved lenders, and you'll deal directly with that lender. But again, the process begins online with the SBA. You'll get an SBA number for doing that. The loan term is longer than the PPP. It can be a maximum of 30 years, and that's negotiable with the lender. So that's really what we have. You can't, you must have appropriate insurance. So again, the qualifications are a little more onerous. It's more of a traditional loan for it. There's no loan forgiveness, but there is a $10,000 emergency grant if you're facing hardship right now. That will convert to a grant, but there's no loan forgiveness unlike the PPP. So those are the kind of the high-end issues on the EIDL. Some of you know that as of April 1st, there have been some requirements that came in with regard to the second act, the Families First Act, COVID-2. And in that one, for the businesses on listening here, that set aside $1 million for emergency unemployment insurance, but it spoke to changes in leave. And specifically, it changed what you'd have typically as FMLA coverage, where it said, hey, FMLA coverage is only going to cover employers with 50 or more employees. It now, for this specific purpose on a temporary level, it covers employers with fewer than 500 employees. And it gives a whole series of sick leave, family medical leave, and other obligations that are going to be required to be covered by the employer. The importance for this, and it gets to what Matt spoke to before, he mentioned vacation and sick and family leave is an allowable expense for you as a business owner on the PPP. However, you can't include in the funds that you paid out of paid and sick leave that are going to be picked up from the federal government in terms of the the COVID too, if you will, the family forgiveness. So that's an important carve out to keep as a distinction. Okay, so that process began as of April 1st. As employers, you put that out there already. So there's a whole series of family medical leave issues that have come out related to COVID that was part of the second act. And again, if you do have an employee, unfortunately, who's taking that leave, you have to calculate that out on the loan forgiveness part at the back end. As Matt mentioned, and as you saw on the slide, the loan forgiveness component and the updates to that were included in part in the rules, but the SBA issued in the rules yesterday a specific notice. Further guidance will be forthcoming. So those two slides are going to be updated in the days ahead. So that's really the summary now.
Okay, thank you, Pat. So, going back to the state and local grant programs, we're not going to spend time on it, but they're out there, or if they're not, they will be. So I would check with, with your lawyers or lobbyists, or call us, and we're happy to, make you aware of them. We've had one already with the New York City Department of Small Businesses in New York. They had 2 programs for fewer than 100 employees. I mean, it is possible that under the CARES Act that the money that you receive could be used to pay that as any other debt, that has interest. So if you're already receiving interest on some of these loans. Look, these are not things that are going to make or break a company. They're small loans. They're all intended as a stopgap measure. There's a New York City Small Business Continuity Fund. There's an employee retention program. California is working on something. Seattle is working on something. So keep an eye out for these things. Chicago has a program up and running, with working capital and $50,000 in loans. So, check your local jurisdiction. And, also the unemployment issues are popping up big time with fleets, limo fleets, and, taxi fleets, and paratransit as well. So what especially since paratransit workers, there's been a reduction in workforce, school bus and bus operators and NEMT providers. And now, like for instance, in New York City, the government is now looking to get people to work and private providers to take people around. It's a little bit of a scary business because some of these people are healthcare workers who may have COVID-19. So, but there are people that are actually starting to get some of their cars on the road. And I think overall, there's going to be a new normal. I think we all know that this is not going to be a flip the switch in a couple of months and everybody's back to work. We all know that airline travel and business travel and even local travel is going to be a gradual, not going to be a straight line up. It's going to be a gradual, augmentation. So, to the extent that people have employee drivers or independent contractor drivers, many people are already on unemployment, and key decisions are going to need to be made. It could be not necessarily a bad thing for your business that maybe since you'll have less of it, you can get some of the best drivers and cherry pick them and put them back to work if you can. Some school bus companies I'm talking to, have all sorts of issues because of the pay scale for their drivers and monitors, and they're making more on unemployment, if you can believe that, than they are in their normal job. So, but that's unique for that industry. I'm not sure if we're there in this industry necessarily, but there is emergency assistance under the Pandemic Unemployment Assistance Program, which came out of Congress as part of the CARES Act, which added $600 to everybody's weekly paycheck. And it goes on for 39 weeks, which is a lot longer than the payroll protection program. There's all sorts of permutations to this. The New York State Department of Labor's website has this chart. There are ways in which you, even if you're not eligible under ordinary rules, or if you're already on unemployment, that you can continue and get that additional amount of money. And there's also under the PUA program, it contemplates people who are otherwise not usually covered will be covered at least for that $600. So there, usually you go through your state agency, that's going to continue. But people who are not working now may need to fill out a form at some point saying, hey, my unemployment ran out, but now I can get the PUA. I think, it's dangerous and slippery slope for people to, as fleet owners, to be advising people to do or not do something. I think it's tricky. My personal opinion is that you should make your independent contract drivers aware of the payroll protection program in the CARES Act, subtly letting them know that this is available for them should they wish to apply, especially if they're working for more than one fleet. or more than one business or act. So I think that's the safest way, which we'll get into in a minute, to go about things. Do not, under any circumstances, tell them not to apply for unemployment. Keep an eye on them. If they do, don't encourage them to do it necessarily. It could backfire on you, I think. But just take a look at some New York City taxi data that we have our hands on. We did some rough math this morning up until this call. And, you know, before this happened, actually, things were so bad in New York, you know, the average monthly income was, you know, $3,724. If you add the CARES Act unemployment, you know, that goes up. And if you go into the payroll protection program, it goes up. So what's interesting is, I guess Congress, and there's a lot of debate at the last minute about this law. There were concerns that people would be encouraged to go on unemployment. Just running some numbers in the New York City taxi industry, it's a wash. You know, drivers could equally be compensated at higher levels and make more money than they were working, than they were doing before, being on unemployment or doing the payroll protection program on their own when they apply on their own. My concern about, you know, this happening is, first of all, there's not necessarily any discussion about premiums going up. I think Congress or state legislatures, I'm sure they will address this at some point. It's absolutely ludicrous and against every public policy you could think of because of this emergency that unemployment numbers have swelled to, you know, Great Depression levels potentially, and that your insurance premiums will go up. I don't think that's going to happen, number one. So, but it's not been addressed yet. Number two, you know, the concern is that if all your drivers are being somehow encouraged to, or you know, going on unemployment, that there may be claims to continue that, and there may be rulings that decide that they are employees and not independent contractors. This could create class action and other issues. I don't think the government in this environment is really going to start going after people. I think that would be ludicrous and scandalous for them to start like conducting audits and doing what they usually do at DOL. You know, so I don't think that's going to happen, but I wouldn't rule out drivers doing class action lawsuits and making this an issue. Virginia and Minnesota have already published guidance saying that employers will not negatively be impacted by unemployment determinations, which is good. New York is not. So be careful with this. Frankly, I wouldn't worry about all the relief that you have there. I would just be worried about the CARES Act. My advice to everybody is take a look at your workforce, envision where you might be when you get back to business in a month or two. Envision what you think is going to happen with your existing contracts, with passenger demand. I know it's hard because of the crystal ball aspect of this, but we all have to assume it's going to be less. And who do you need on your payroll? Look, many of these people are not going to get any employment elsewhere, but you never know. They could leave to work for Amazon or some of these other companies that are hiring. Most likely, the same people that were working for you, your managers, your human resources directors, are going to be there no matter what. But this is a question of doing the right thing by them and seeing if you can compensate them at levels above what they would get from unemployment, especially the managers that are compensated at $75,000, $80,000, $90,000. So, you know, it makes sense if you're going to do that, or if you don't have existing resources to cover your rent, to just keep the lights open, or at least keeping them dimly lit, as we put it. So I do encourage people to look into it, at least do the math and see what you come up with. We're here to answer questions if you have questions about the math now or afterwards. And let's get ready really for round 4 of this thing. Right now, unless you really need it, I don't think you really should be wasting your time on the EIDL program if you haven't already put in an application. See if the CARES Act works for you. Let the drivers apply on their own. Give them the paperwork. Tell them how they can apply for their own loan. That's better for you legally, in my view. It could be a wash, or they may be earning more money under unemployment potentially. But I think Congress kind of did this math ahead of time, and the math that we just did in New York City shows that. My recommendation to TTA is to get everybody on the same page, John, Al, and Tom, because we could ask for a handout like the airlines got in round 4, and Congress has committed they're going to go back to the table. It's very possible that this program, if it works, will become more streamlined, and the June 30th date will be pushed back, and there may be an application to extend. I think that's highly likely, if especially in people may go back to work in a couple of months in New York, but there may be other cities and states that are experiencing what we're experiencing now, in a month or two. So I would encourage you to go back looking for innovative solutions with your lobbyists as well. My biggest concern is, where the hell is all this money coming from? Okay, it's all going to come from us eventually. In a year or two, they're going to raise taxes on all of us. So in addition to asking for money, I think it's really important that the ground transportation industry, business travel, taxis, limos, buses, all get on the same page and ask for one thing, which is we will be getting tax incentives, deductions, write-offs, or maybe even be exempt for a year from taxes, because our industry was devastated. I think the messaging is important. This is not over yet. This is a work in progress. We're happy, Pat and I and our team are happy to answer some questions now, John and Tom and Al, if you have them.
Yeah.
I know you sent
Matt,
in advance, but we're here.
Matt, thank you very much. It's John Boyd again. I really appreciate that update. We do have some questions that have been coming in over the chat. I want to start, and we're going to try to get to as many of these as possible. So probably we may need to do some rapid fire here, but because I know everyone's very busy today. But so one question is, what collateral do I need to put up to guarantee the loan?
No, none.
Nothing.
No collateral needs to be put up for the payroll protection program.
Okay. All right. That's good to know. I know that's on everybody's minds. I know that the rules are changing all the time, and it may differ from bank to bank, but what general advice would you give if you're a company today and you're trying to prepare the paperwork to apply for these loans? There's obviously the form that you have to fill out, but what additional documentation do I need to apply? And what additional documentation will I need to gather in order to apply for some of these loans? And has the SBA issued its definitive list of required documentation, or
Sure.
could that change?
Sure. What I would do now, and this is our checklist, which we'll be sharing with you, exclusively as soon as we have it, before we share it with others. Get together your articles of incorporation, get your bylaws together, copies of each owner's driver's license, payroll expense verification documents, IRS forms 940, 941s, 1099s, breakdown of payroll benefits. So reach out to your CPA or your human resources directors to start having them put together documents, certification that all the employees live within the United States, proof that they're U.S. residents, a trailing 12-month profit and loss statement, a description of how COVID-19 affected your business, which is obvious and easy to do, and a description of how you intend to use the PPP funds. So yeah, I would start getting all the paperwork together, especially the payroll records. I recommend that everybody take a look at the CARES Act. Think about your business, what you need now. Some people are telling me they don't need anything. Some of the people are owners, they have savings, they're just sitting here waiting. That's fine. However, if you have managers that you want to take care of, or other employees, like human resources or administrative staff that are coming in and doing other functions for you, or if you have a skeleton crew handling certain matters, look at those people and do the math for your payroll and see what you're eligible at the top level for, and then put that in, because you can always pay it back and be forgiven. But what's critical is that you pay it back, and not be aware that if you use it for more than 25% of your rent and utilities, or if you use it beyond the $100,000 cap, that it will be a 1% loan. Now, that to some, that's not a big deal. So I recommend that you look at that. And if that's not enough, then look at your state and local or the federal EIDL grants, and be very careful with this unemployment thing with the drivers. I'm very worried about it. That's why I'm advocating that you give handouts to the drivers, or send them texts or emails, or give them the information letting them that they're eligible for it, and then on April 10th that they can apply for it, and encourage them to do it. They'll look into it, and maybe it's beneficial for them. You don't know.
Matt, thank you. We've got another question. This is going back to, thank you. You had a very useful breakdown of hypothetical scenarios for the PPP loans. Just to double back on that and to clarify, the general calculation here is you multiply 2.5 times your payroll under 100 for employees under 100,000 plus the EIDL grant, I guess we would call it, the 10,000. Is that correct?
Pat, could you address that question, please?
Sure. Yes. So, John, to answer your question, the way that the calculation works, it would be three things. It was actually going to be the payments on a monthly basis for those not making $100,000, wages, compensation, commission, tips, salaries to independent contractors and employees, divided by 12 times 2.5 plus the EIDL. So you want to include that in your calculations from last year. Your commissions paid to independent contractors will be included as well. So that's an important factor.
And that's a fine point that we were talking about earlier with Al Lagasse. You know, despite what the statute says, I mean, if you read the statute strictly, it basically is it's contradictory and unclear at the same time. It basically says, if you read it, the definition of payroll costs and who's eligible, that you could actually pay your independent contractor drivers. But I think, let's use common sense here. They're not going to allow people to double dip. They're not going to allow a driver to apply. Somehow it's going to end up in something really, really bad with inspector generals and others. You can't give a driver money under the statute and then expect them to apply on their own, and they're going to be paid twice. Now, there is conceivable that they may be working for 4 other companies other than yours, and they're not taking care of them. I think that's something that they didn't think about. I don't think they were thinking about our industry when they did this in the middle of the night at Congress. But the guidance that came out is useful. As Al said, the guidance that came out clears it up, even though it violates, it's not consistent with the statute. It really says that if you're an independent contractor like a driver, that you should apply in the second round. However, I guess what I'm hearing, Pat, is, you know, the calculation, correct me if I'm wrong on this, the leverage, you can leverage the independent contractor commissions and tips as part of your payroll calculation to up the amount of the loan that you get. Is that accurate?
That's accurate. And then up to 25% could be used now for non-payroll costs. So if you think about it, if you're maintaining the same level and things have dropped off and you say, hey, I only have 75% because my independent contractors aren't there. Maybe your rent, your interest on the mortgage, your other loan obligations, that interest will get you closer to that 100% anyway, even though your payroll right now, combining the independent contractors and wages, doesn't get you there. Yes.
Great. Thank you, guys. All right. Another question from one of the audience. I furloughed most of my employees prior to March 30th. What is the snapshot for my employee level that I have to maintain for 8 weeks in order to qualify for forgiveness?
Mm-hmm. Pat, you want to handle that one?
Sure. Can you hear me? Yes. So for that, specifically, we received from the guidance from the SBA. How is this going to work? Loan forgiveness is going to be affected by a reduction in workforce. Okay. So it's going to be reduced if you decrease your full-time headcount. That's an important factor there. You'll be reduced if you decrease salaries and wages by more than 25% for any employee making less than $100,000. So your highly compensated employee, let's say making $250,000, if that person is reduced by 50%, that would not be impacted. That's an important distinction. And then the rehiring part, John, you have until June 30th, 2020, to restore your full-time employment and salary levels for any changes you made between February 15th and April 26th. Now, again, as you saw in our slides, we're expecting and anticipating additional qualification. We red flagged that because they've given us already in the interim rule a very clear line. SBA is going to issue additional guidance on loan forgiveness. So that's what we have in their guidance thus far. That's what we have in the statute. Stay tuned.
So in other words, just to kind of carry that out a little bit more. So, and that's a very good explanation, Pat. So let's say if you, let's say you had 100 employees, and these are actual like staff employees, let's just say, and you drop that down to 50 now because of the crisis. You could apply now for a loan based on the 100. And if you bring back, let's say all 100, you know, the 50 that you let go, you bring them back between now and June 30th, and that part of the debt is forgiven. And if you don't bring them back, then you have to, because you're using the money for something else, then you would you might have to pay that part back. But
Mhm.
but then, yeah, am I making sense on
That's
that?
right.
Yeah,
Yeah.
you are. It makes
Okay,
it's
great.
perfect sense. And you could also use your independent contractors as leverage to get that number higher. And you can use these funds for other things for your business. You're just not going to be forgiven on it, correct, Pat?
Yes, that's right. So exactly. So and if you can't put it into another silo that is an allowable, forgivable expense, you're stuck with the 1% loan. That's right.
All right, here's a good question. Is average payroll based on the annual year of 2019 or the previous 12 months from the date of the loan application?
It's the previous 12 months, correct, Pat?
Oh, can you hear me? Yes. So for the look back is you're going to look at a 12-month window. I'm just trying to see if there's anything in the rules that change that from our initial guidance from them. It looked to be your calculation of payroll cost for a period of time of 1 year.
So
Yes.
The statute and the original guidance said 12 months from the, prior to the date of the loan. What is confusing is if you look at the borrower application form, it kind of indicates otherwise. So if you look at page 3, for purposes of calculating average monthly payroll, most applicants will use the average monthly payroll for 2019. Okay, so that's like a new thing, all right, that was not in the statute.
Okay.
Excluding costs over $100,000 on an annualized basis for each employee. For seasonal businesses, the applicant may elect to use instead an average monthly payroll for the time period between February 15th and June 30th, excluding costs over $100,000 on an annualized basis. Well, that doesn't apply. You guys are not seasonal. For new businesses, average monthly payroll will be calculated using the time period January 1st to February 29th. So the original statute said 12 months before, but the instructions on the form that SBA put out, which is what I would rely on, say applicants, it says most applicants will use it. It implies there's discretion. The monthly payroll for 2019. But if we'll double check this and get back to you, but I am certain that unless they change the guidance, it was 12 months prior.
12 months prior
That's
to
correct.
the application loan date. Is that correct?
That's right. And again, with one caveat that Matt brought up that everybody should understand, I don't know how applicable it's here. It's for employees, quote, whose principal place of residence is in the U.S. too. I don't know if that's going to apply. Some of you do have international folks that might be here domestically, so that's a carve out as well.
Yes.
Okay.
We will today check the interim final regulations and clarify, make sure nothing has changed. What an oxymoron that is. Interim final.
Yeah, but it does say in the rule from the last 12 months for those employees. It says it in the current rule.
Okay.
Okay, good. Good.
Here's a specific one. What if I haven't paid taxes or filed a recent tax return? Interpret that as you will.
Well, if you got an extension, I mean, they're going to require other documentation, correct, Pat? And that's even on the application.
Yeah, we're not going to treat that as a self-referral from anybody to get a finder's fee from the IRS. They're going to be looking for money soon.
Everybody was extended until July, correct? I mean,
that's exactly right. So as long as you're in conformity, you got it right. But again, because there's a certification on the application that says I certify that the documents that I am submitting as part of my payroll costs are identical to the documents I've submitted to the IRS. Keep that in mind.
So,
yeah,
so
to do a little CYA, I would call my CPA. That's my advice to you. Have them take whatever your payroll director is looking at, put it together, have all the forms put together with a statement or a letter from the CPA, not to pass the buck or anything, but look, we want to make sure that you protect yourselves and don't unintentionally make an inaccurate statement on the form. So I would do that. And it's such a simple form that part of the problem is it leaves a lot to be desired. It leaves more questions than answered. But I'm sure over the next week or two, there'll be probably 1 or 2 levels of additional guidance as the banks try to figure this thing out.
Is it, well, and that's a good segue because the one question is, what is it the local lender that provides that approves the loan, or are they just merely a pass through and somebody in Washington at the SBA is actually approving the loan. Or
Well,
if there's
Matt,
somebody
I have
affiliated
some,
with SBA.
no, in the rules that came out, Matt, if I can, in the rules that came
Yes.
out, the lenders were given protection in two ways. The SBA guarantees the loan. And the other incentive you probably heard is why it went from 0.5% to 1% to bring lenders in at small community banks. But they're protected in terms of loan forgiveness and the loan because the SBA is saying, hey, they're almost held harmless to any misrepresentation because they want this to get out. So a good faith basis is going to be used. So the lenders do have a responsibility. Lenders are going to probably seek additional guidance, but they sort of have that now in the interim rules, some assistance and benefit to protect them. So their goal is to get it out.
I mean, I don't know what the internal workings are between them. We will find out that, but I believe that based upon press conferences, guidance, and statements made that they get their instructions, and if they are confused, they're going to ask SBA for guidance, but they're going to not request SBA approval for each individual loan. The president and others have made it clear that it needs to be as seamless as possible. The Treasury Secretary pretty much said that the banks are just going to be doing these things immediately. So I think that's the good news. There's not going to be any government red tape, but that doesn't mean that they may get some interesting paperwork from somebody, feel uncomfortable, and they're going to wait like a couple of days to get some answers from the SBA and then get back to you. But if you do everything consistently with the people that have been doing it before you, then they're supposed to just do it immediately.
All right, another question. And I know you addressed it in different parts in your presentation, but there are the EIDL funds, almost like the very quick $10,000 injections, and then there are the PPP funds, which are a larger amount that a company could get. How quickly are those funds dispersed? The EIDL $10,000 and the PPP thing. Yeah, is there any? And
Well,
is it different?
We have not seen them quickly disperse. In fact, like I said, there was another operator I'm aware of that, and people who have applied who haven't received it yet may be getting emails pushing them to apply for the CARES Act first. So this is going to definitely be quicker. I believe, correct me if I'm wrong, Pat, that the interest rates are better for sure at this point.
Yes, the interest rates are better. 1%. It's a 2-year loan versus something that could be up to 30 years at a set rate of 3.75%. But the concern is that will the lenders be ready? And just to follow up to your question, from the rule yesterday, each lender's underwriting obligation under the PPP is limited to the items listed in the rule and reviewing the application form. And the application form, as you see, is very simple. It comes down to 1.5 pages or less of information to provide. So that's where we are. So the lenders are incentivized to do that.
This is a 3-step process conceptually is how I see it. Number one, you need to sit down operationally and see, what do I need now when we're sitting at home doing nothing? And what do I need when we go back at 25% of business or whatever good faith estimates we think we can come up with? These are judgment calls on business decisions. Once you do that, list out your expenses. This is what I need for rent, utilities, for payroll of people that I want. And here's other stuff that's not included within PPP. Then the second part of the process is do the calculations on the payroll to see how much PPP you're eligible for, and then apply that to the money that you need. And if there's a significant amount left over, you can get that additional $2 million for other costs, buying new vehicles or other insurance or other issues you have to deal with. So I'm not discouraging people to do it, but I think you should do it, as the federal government kind of insinuated, after you've already gone through the CARES Act process, which gives you quick money right away. So, and again, don't necessarily say yes to the feds and no to your locals. Okay, you may qualify, in several states and localities for additional funding. So you got to look at the big mix. So it's like, here's what I need. Then we're looking at the PPP, and then let's look at the federal EIDL, which we still have time on, and other programs which you may or may not have time on. Some haven't been created yet; they're being discussed. The deadline today for New York City, the deadline for New York City's small business program is today, because that started a little bit earlier. So you really need to check with your local lobbyists, lawyers, or call us and we'll try to guide you at no charge and let you know what's going on in your jurisdiction, because we've already gathered a lot of information because we have clients all over the country.
Great. Okay, I know that our time, we've run over our time a little bit. I have two very quick questions, or perhaps they're quick, that I want to get to, and then I want to turn it back to our president, Tom Arrighi, for a few final words. The first question is, if we get a PPP loan, does that mean we cannot use the full tax credit for each employee? I believe this is under the FFCRA option, the families, the first, yeah.
Okay, Pat, you want to quickly cover that one?
Oh, Pat, are you still with us?
Pat, you still there?
Oh, you can't hear me. Sorry about that. I kept
Okay,
it on
there you
mute.
are.
So with regard, so the loan forgiveness, there is a carve out, and I mentioned that before. When you have people qualifying under Families First, you can't double dip. So if you've got those persons who are taking family leave, sick leave, et cetera, that benefit cannot be included. So you have to make sure that when you're doing your payroll for the loan forgiveness, and again, more guidance will come out on that, that part of it is carved out. That does not mean that your employee who is taking advantage of that because of circumstances can't accept that. The answer is yes, but you can't have both. You have to make sure that's not included in your loan forgiveness component.
And I know this is very confusing, and I'm really hoping that the federal government will come up with a calculator. If they don't, I mean, we're going to be doing our own calculator, appending it to our frequently asked questions and our checklist. So it'll basically have a sheet that walks you through the calculation process, a little bit like that slide, but more detail. And it will have a little provision that talks about the family leave when you're doing the payroll cost calculation, and the EIDL and all that other stuff.
Great. And then one last question, and then we'll go over to Tom. Is this FICO driven? In other words, is your credit score going to be a factor in whether you get the loan on this?
No, but it appears from the questions that they're looking to see if you have, they look at your residence, they look at whether you've been convicted of a felony in the last 5 years. It's really just that basic stuff.
Yeah.
They're not looking at credit scores or FICA or any type of credit worthiness.
Great.
And again, John, that's because that's been pushed over to the SBA. They're guaranteeing that loan. So that normal underwriting requirement has been removed and passed on, and the SBA is absorbing that.
Oh, just to clarify on that point, though, I'm just talking about the payroll protection program. Okay.
Yeah.
They may be asking questions of that nature, Pat, when you're applying for your other SBA loans, correct?
Yes, that's right. That's right. And in fact, not only creditworthiness, you have to have required insurance requirements. It goes through the normal loan origination process to make sure that you meet all dot your I's, cross your T's. Exactly right.
Great.
All right. One question to ask, just to get clarity on that forgiveness. And John mentioned it. You start off with 100 employees, staff, drivers, and so forth. And then you drop down to 50. In 8 weeks, there's no way anything's going to change in 8 weeks. And let's just say maybe you pick up another 10 employees. So now you're still short 40 employees. What happens? So you have to pay the difference, or do you get forgiveness for a portion and you have to pay the other portion back? Well,
it's a good question, Tom. I think you would just take whatever overage you have and pay back the loan. Correct, Pat?
Sorry, I had on mute. So what happens is, in the case like that, Tom, is you couldn't take credit. You're supposed to maintain your workforce. So you've reduced it, but now you're going to come back, right? And you're going to lump in rent. You're going to lump in utilities. You will also include interest on mortgages or interest on loans that existed before February 15th. So even though you don't have the same payroll because of circumstances and you haven't been able to achieve the goal of getting everybody retained or back on, you do have some flexibility, but capped. That's also changed too, because no more than 3/4 of the loan forgiveness is going to be applicable to payroll costs, which includes group health insurance, paid leave, sick leave, right? So you have some flexibility to take non-payroll costs and lump that in and get closer to the 100%.
So the sick leave, people who have corona, or isolating themselves, I can put that in, just to put it up there. I guess they have to take 14 days. And I have probably 10 people have taken 14 days for the coronavirus. That can be lumped into it also.
If under for Families First, there's a portion of it that you're paying that you're going to include as a cost that's covered by the feds, that can't be double dipped. You have to exclude that out. So that's again, and that's going to, and your point is great. You're going to need to have that for the loan forgiveness regs, because a lot of employers like you are going to have, unfortunately, be confronted with that. Have a COVID-19 person or an immediate family member that he or she is taking care of. How do I carve that out? I have to pay this. Well, now your loan forgiveness is going to have to be adjusted. You can't have it both ways.
Okay, thank you.
I mean,
No, I'm just, oh, sorry, go ahead, Matt.
What's really confusing, Tom, is, and this is what we've been grappling with, is, how cut and dry is this if you don't need all the money? I mean, you could retain your managers. I mean, the good part of this, it's kind of a gift from the federal government after all the taxes that they've taken away from us, to us, to pay your employees, even if they're just sitting at home and they're not doing anything technically. They're on your payroll. So it's really just taking care of them for their well-being economically. And, you could also make use of that and have them do things like do standard operating procedures, get ready for the comeback, do planning. So there is when you say we're not doing anything, I think drivers aren't doing anything, but, certainly managers, I would encourage you to, if you think it makes sense, you got good employees, keep them compensated, keep them home, have them give assignments. I mean, certainly everybody's working around the clock on my staff, 14, 15-hour days. So, you can keep them busy, prepare your marketing comeback campaign, look into the cleaning materials and how you're going to operate. This is like in some ways, among the tragedy, it's like a sort of a gift of time to retool the business and do training and do things that you never otherwise would do. So what's really confusing though about this application is it almost feels like you're being tricked. Like here's what your payroll is, 2.5 times. Okay, we're wiring the money tomorrow, right? And then if you don't use it, you're going to have to pay it back and pay interest on it. It's almost like a gift to the banks.
In 2 years.
What I was hoping they would do, and I'm hoping that this in the next couple of days, that the banks will come back and ask you put in your calculation on the form, okay? And this is what the calculation is. You're entitled to 100 grand, but you only need 75 after all the rents and utilities. Will they ask you if do you need all of it or will you take less? I think they really should be doing that to conserve money for others. Frankly, the way this is working, what I've seen so far, correct me if I'm wrong, Pat, they're asking you to put a number and they're just going to wire you the money and figure it out later. So be careful with that, because if you don't use it and you don't pay your employees, you don't use it, then you're basically going to be paying interest on that. You can pay it back. You're going to be paying interest on it, and it may not be that much money that it's a big deal, right?
Yeah, the problem
That's accurate. And there's 3 boxes actually. It's the payroll times the 2.5, and then the third box is, if you see it, very straightforward. There's only three fields: number of jobs. So again, you have a denominator there too, to answer your question, Tom. If you've gone from 100 to 75, I may now have a proportionate reduction because my workforce is not the same, right? So those are the 3 numbers that they have. That's all they're asking for. It's that simple.
This is really what's unclear. And as soon as we get guidance, because look, we'll touch base and send you updated information because we have clients that are applying. So as we get answers from them in the next couple of days, I think TTA should share that information with each other, because what I would have done if I did this application, I would have said, here's the calculation, which is what they've done. What are your number of employees on payroll? What number of employees are you going to have on your payroll that you anticipate from now until June 30th? And they should be giving the loans based upon that. I think this is a give me to the banks. They know it's unclear. They're going to give you the money and they're going to charge you interest for it. And probably think that, hey, these businesses could probably use this money anyway. So if it's not taking care of the payroll, then you're going to be on the hook for it. So that may not be a bad thing. If you need the money, anyway, it's less red tape than going through all this SBA stuff or getting a business loan. So,
on that note, Matt, on that note, I know,
decision, Tom. I think
Matt, on that note, I know that everyone's time is valuable today. There's a lot that everybody needs to get to. Tom Arrighi, our president, would you like to say any closing words?
Yes. Yeah, thank you. And Matt, by the way, you'll have to pay that note in 2 years. That's pretty quick for everyone here to pay their money back in 2 years. Thank you. I want to just tell you, what a great webinar. I appreciate it. Hopefully we can do it again in a couple of weeks when there's a more defined, when there's a little more defined way to get the loans. I appreciate it. Pat Russo, thank you very much also. I appreciate you joining in and helping us understand this a little better. Everyone who's listening in, thank you for joining us. I know it's a lot. The Transportation Alliance will get stronger in time, and we all will get stronger. Just learning these webinars really help. So once again, thank you, John, Al, Matt, Pat, and everyone else who has joined us. Thank you, and be safe, strong, and healthy. God bless.
Great. Thank you, Tom, and thank you. We're going to wrap it all up, but yeah, a big thanks to Matt Doss, to Pat Russo from Windell's Marks for all of their expertise. Thank you to President Tom Arrighi for all that everybody's doing for this industry at this extremely challenging time. And I urge everyone in this industry, both members of the Transportation Alliance and non-members alike, to regularly visit the Transportation Alliance website at thetransportationalliance.org for our updated page of COVID-19 resources. We are adding to that every single day. Please stay healthy, stay engaged in this industry, and let's all talk to one another, and together we will all get through this. Thank you all very, very much.
Thank you. Stay safe and well, everybody.